Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
A mega deal closed, but at what cost? This is Paul Harris at Kitco Mining at the BMO Metals Mining and Critical Minerals Conference in Hollywood, Florida. Joining me today is Tom Palmer, President and CEO of Newmont. Tom, welcome to Kitco.
Thanks for having us, Paul.
Interesting year last year for Newmont. Congratulations on closing the Newcrest mining deal late last year. You had to get a lot of antitrust approvals from many jurisdictions. Was it harder than you thought to close? Was it harder than the Gold Corp deal you closed a few years ago?
It was actually ended up being a pretty straightforward close. We had to work through a few jurisdictions. Australia tends to be on the critical path, getting through the Foreign Investment Review Board. Nothing particularly unusual around that. It typically takes around the 6-month time frame, and we were bang on that time frame. So we announced a binding agreement mid-May, and 6th of November we closed the deal. In the Canadian context with Gold Corp, the 5 years previous, it was about a 3 or 4 month close. So nothing unusual. It's just navigating through that process and working through with each of those regulators.
Okay. From the initial announcement, I recognised that there was a clear focus, a clear push into British Columbia, and since you've announced the divestitures, that's become even more clear. How important will British Columbia be to the future of Newmont?
Well, it's a critical part of Newmont's go-forward portfolio. The value proposition for this transaction was built around 3 areas. First one is the ability to further strengthen our portfolio with Tier 1 operations, because we believe that we have a capability to run very large open pit or underground mines as well as or better than anyone else. So if we had the opportunity to bring Tier 1 operations into our portfolio, we'd look at that. Second criteria for us is we have the opportunity to consolidate in the United States, Canada or Australia. That will be of interest to us. That was an important part of the Newcrest value proposition. And the third component was the ability to increase our exposure to copper. We had a very nice organic project pipeline with a lot of copper in it. Newcrest has a lot of copper in its portfolio. So those 3, Tier 1, those jurisdictions and exposure to copper were an important part of that transaction. In announcing our go-forward portfolio, it's exclusively Tier 1. Those operations are either Tier 1 today or they have a pathway to get to Tier 1. And a key part of that go-forward portfolio is British Columbia. It's a district, it's a Tier 1 district. It's a district that we'll be operating in literally for at least the next century. And a significant proportion of the metal that we'll produce out of British Columbia will be copper. It'll be copper from the Red Chris block cave. It'll be copper from Galore Creek, our partnership with Teck. And we'll have a nice amount of gold from Brucejack as well as Red Chris and Galore Creek. Fabulous district to be in.
Although a multinational company, Newmont has been for many years considered an American gold company. And yet with the divestitures you've announced, Cripple Creek in Colorado, your home state is one of those going. And so your North American focus going forward is going to be British Columbia, the Barrick Gold joint venture, Nevada Gold Mines in Nevada and Mexico. To a certain extent, is Newmont losing its essence because of that?
Not at all. I think if I look back at Newmont's 103 years old. Our history as a gold producer goes back to the late 1980s. So our modern history as a gold producer. We were diversified for many years before that. As a gold producer, for a short period of time in the 1990s, it was just our assets in Nevada. But we went offshore in the 1990s. We were in Peru. We were the first Western company into Peru as Shining Path was still being disbanded. We went into Indonesia under the Suharto regime. We were the first Western companies into the former Soviet Union as the Iron Curtain came down. And we've been in Australia, we've been in Ghana and many other locations. So Newmont in its modern 30 or 40 year history has been an international gold mining company that happens to be domiciled in the United States.
And given the pull-out of the sale of Cripple Creek and Victor, will you stay domiciled in Denver?
Denver's home.
Okay. Now, in a different market, Newmont's share price might have jumped on the back of closing the Newcrest deal, but the reality is that the market capitalization has halved in the last 2 years. The share price has fallen by 2/3, and this despite gold price hitting that record $2,000 per ounce, while your share price has increased by about 1/3. What gives on the company's performance?
Yeah.
What do investors not like about this?
See, last week was a big week for Newmont. In fact, 2023 was a big year for Newmont. But what we announced last week was clarity around our go-forward portfolio. A portfolio, as I mentioned earlier, exclusively Tier 1 operations. We have in that go-forward portfolio 10 Tier 1 gold mines. That's more than half of all the Tier 1 gold mines that exist in the world today. We sit on a reserve and resource base that is second to none in the industry for gold. We are 30% larger than our nearest gold peer, and we sit on a copper reserve and resource base that is significantly larger than our nearest gold peer, 40% in fact than our nearest gold peer. And we have an organic project pipeline lining up behind that operating portfolio that will see us grow in copper and extend our life in gold. It's a fabulous story. It's not been seen before in the history of gold. A portfolio with that strength and that growth potential with the organic project pipeline. Our share price is at a generational low. So we've put the markers out there in terms of what you can expect from Newmont. We are committed to delivering on that, and you've got an opportunity as an investor to buy in at a generational low and ride our delivery of that commitment and value up. It's a wonderful time to be buying into Newmont.
Maybe it's a wonderful time for buying, but you've had some loyal investors. I imagine I get the impression they're not quite as happy. We're here at BMO, an investor event. What's been the reaction to the deal in some of the meetings you had? I understand you had a very heated dinner last night with an investor crowd.
Every year at BMO, I have some good dialogue and discussion with our shareholders, and the highlight of a few days at BMO is the dinner we hold every year. We very much look to have some really robust discussion and debate around what's happening in the industry, what's happening with our company. So as you move through different stages of your life cycle as a business, you're looking to have some robust discussion and debate. So we welcome it. We welcome the opportunity to be challenged, and we welcome the opportunity to understand and listen to our shareholders. The feedback from our shareholders is our strategy is crystal clear. What we have transformed Newmont to is never been seen before in the gold industry. The opportunity for us to generate significant value sits there out in front of us. Our work now, led by me and my executive leadership team, is to deliver on that commitment, and we are committed to delivering on that.
I can understand how when you propose a new vision or a new direction, it can take some time for that to penetrate and to seep into the consciousness. But imagine the outcome of the Newmont deal is a bit different to what you're expecting so far.
It's exactly what we're expecting in terms of the portfolio that we built. It's a continuation of a clear and consistent strategy that we started with our acquisition of Goldcorp 5 years ago and the establishment of the Nevada Gold Mines joint venture. It was about upgrading and building a stronger Newmont. We've got a portfolio that will produce between 6 to 7 million ounces of gold for literally decades, and all-in sustaining costs that's going to improve down to $1,150 an ounce within the next 2 or 3 years as we hit our marks in each of those operations. The strength of those margins is what's going to enable Newmont to be resilient through a gold price cycle. And I've lived my whole life in mining. I've seen many price cycles, and what you look to do is create a business that is resilient through the price cycle, and we have a portfolio that can do that. And the added feature of this portfolio is it's got 150,000 tonnes of copper out the gate, and a project pipeline that can grow our exposure to copper over time. That's a really exciting value proposition.
Okay, so it's a matter of time before that you start getting rewarded. As I mentioned, you announced last week the 6 assets that are for the chop. It's interesting that a number of those were former Goldcorp assets, a company you only bought, 4 or 5 years ago. It seems a bit harsh that a lot of the assets you only recently acquired are now going out of the door. Why is that?
There are six assets that we've listed for divestment, or what we call hurled for divestment. Every single one of them are high-class assets. Each of them have great teams, but they are Tier 2 assets. That means that their production profile is not going to hit our Tier 1 definition. So they won't get the management time and the capital within a Newmont portfolio. So when we look at what's best for those assets, where those assets going to realise their full potential, It's an opportunity for those assets to be cornerstone assets in another company's portfolio, and those teams and those ore bodies can realise their full potential. If you look back at Newmont's track record over time, we divested both Jundee in Australia and KCGM to Northern Star. And Northern Star today, a great gold mining company in the Australian context, has assets that were in the Newmont portfolio that are getting the time and attention within Northern Star's portfolio, with KCGM, the super pit, being their core asset. Waihi sits in the Oceania portfolio, a great little asset in New Zealand. Our Batu Hijau operation in Indonesia sits in PT Ahmad. It has gone from strength to strength when it's the single asset in an Indonesian company. There are many, many good stories of Newmont assets finding a home in a portfolio where they can get the time and attention and deliver value for shareholders and deliver economic livelihood for workforces and the surrounding communities.
Okay, let's talk a little bit about the company's balance sheet. With the Newcrest deal, long-term debt jumped to $7 billion. What's the plan for the balance sheet over the next couple of years?
We set out in our announcement last week some pretty clear markers in terms of liquidity and debt and what we're looking to achieve over the next couple of years with our balance sheet. And we've got proceeds coming from those divestments, as well as free cash flow that will generate from our operations. So we're looking to have a cash balance of around $3 billion, overall liquidity of $7 billion, and to get our total debt down to about $8 billion. So it's about $1 billion we want to bring down from $9 billion to $8 billion. We are committing to having discipline around how we spend money back into the business. So it'll be $1.3 billion every year on development capital. And we also are committed to a base dividend, to maintain our base dividend of $1 per share going forward. And for any additional cash or the proceeds from divestments, once you've hit those markers on your balance sheet, to be returned to shareholders through a buyback. And we had our board approve a $1 billion share buyback last week as well.
I'd like to ask you a little bit more about that specifically, Tom, the buyback. Why that rather than increasing the dividend? I know you mentioned your share price is at I think you said a generational low or something to that effect. Is it because you see the shares being really, really good value, or are you sort of rewarding shareholders for leaving?
It is all about really, really good value. So a dollar a share of Newmont for a dividend from Newmont is a significant yield at today's price and as our share price grows. So we have a very competitive yield from that dividend, and then the opportunity with those proceeds, any net free cash flow to buy back shares at incredibly good buying. That's what our intent will be. We've got to ensure we've got a fit balance sheet, but as we realise the proceeds from those divestments and we realise the potential of this portfolio, we have said very clearly to the market and to our shareholders, we will be buying back stock.
I want to close by talking about the company's decarbonisation efforts, and we're going to bring in innovation here, hopefully. Newmont's one of the few gold companies big enough to really sort of work with suppliers on trialing and piloting new technologies. You've got an agreement in place with Caterpillar, the large yellow machine company, for both automation and electrification. What innovations are potentially coming around the corner that's going to help the mining companies?
Yeah, it's a fascinating world we live in, and the opportunity for technology to transform the mining business as the world goes through the energy transition is a really exciting story. If you think between now and 2030, a lot of the reductions in greenhouse gas emissions is going to come from renewables. So it'll be solar power, wind power, start to bring renewable energy into a mine site. But you need to start thinking about how are we on the journey to net zero really beyond 2030. And you want to have a tier one portfolio with the life out in front of you to be able to have the capability to deliver on that net zero ambition that we have and many other mining companies have. So you've got renewable energy coming into the mine site, that's powering your mills. You've got equipment that you need to move the material around, both open pit and underground. Battery electric equipment is going to be a key part of that move to net zero. And in order for battery electric equipment to be operating in a mine site, you need to develop it, and you need to take a risk with the equipment manufacturers to prove that equipment up. And so that's what we're doing with Caterpillar. We're saying to Caterpillar, we're prepared to take a risk to trial some of this equipment on our mine sites. we want you to take a risk in shortening that product development cycle.
And is that including in open pit operations? Because that's one of the holy grails, isn't it? Having battery electric and open pit.
Open pit and underground. And the autonomous haulage that we have commissioned at our Boddington mine in Australia, the only autonomous haul mine in the gold industry and the only autonomous haul mine in a deep open pit mine, is essential for battery electric equipment to work sustainably in the future, because you'll have automation having that truck connect up to catenaries to charge those batteries as it's driving up out of the mine, and then it'll regenerate as it comes down to the mine. So the combination of autonomous haulage and battery electric equipment and renewable energy is what a open pit mine and, quite frankly, an underground mine is going to look like in the future.
Well, that's a fascinating aspect. Okay, Tom, we're running out of time. So where do you want Newmont to be by the end of the year?
Newmont will have delivered on the value proposition we saw from the Newcrest acquisition. We'll be hitting our marks across each of our managed operations. We'll be delivering on the 4 key projects that we've got in execution right now. And we will also, at the end of the year, have done the strategic and life of mine planning on our go-forward portfolio. And at our Investor Day in November, we'll start to tell the story and the strength of the go-forward Newmont portfolio and what it looks like over the next 5, 10, 15, 20 years. Really exciting time.
Well, I look forward to catching up with you later in the year to getting an update on a lot of these initiatives. Tom, thank you very much for joining us today.
Thanks, mate.
And this is Paul Harris for Kitco Mining at the BMO Metals Mining and Critical Minerals Conference in Hollywood, Florida. If you like what you see, don't forget to subscribe.
Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.